This week could really be one of the most important for crypto all year. We've got three huge, totally separate forces that are all about to collide. And honestly, the outcome could set the tone for the market for months to come. So let's break down exactly what's on the table.
So if you just take a quick look at the market right now, everything seems pretty healthy. We're seeing green across the board for the big names like Bitcoin and XRP. Yeah, on the surface, things feel pretty calm, pretty steady.
But that's the big question, isn't it? This calm, it's happening right before what could be a massive storm of market-moving news. We've got central banks, tech titans, and world leaders all making huge moves this week. So, is this quiet strength going to last? Okay, first up, let's talk about the folks who literally control the money spigots, the central banks. What they decide this week could totally change the flow of money around the globe. And that, as you can imagine, has massive implications for crypto. See, the thing about the US Federal Reserve is this isn't just some one-off decision. They're deep into what's called an easing cycle. They've already slashed rates by 150 basis points since September. Pretty much everyone expects another 25-point cut this Wednesday, and the market's even betting on one more in December. But, and this is the key part, the rate cut might not even be the real story here. That's the headline, for sure, but the smart money is watching for something much more subtle, a little policy shift that could actually be way more important. And that's where this term comes in, quantitative tightening, or just QT. All it means is the Fed has been shrinking its gigantic balance sheet. And when it does that, it effectively sucks money out of the financial system. It makes everything a little bit tighter. And this is why that's such a big deal. The Fed chair himself, Jerome Powell, basically just hinted that the end of QT could be just around the corner. If they stop this program, it's a huge signal that the Fed is done actively taking money out of the market. Even a whisper of that could send risk assets, like crypto, absolutely soaring. But here's the twist. While the US is easing up, it's definitely not a global party. Over in Japan, for example, the Bank of Japan is expected to just hold steady. And this split, right, this divergence between the big central banks is a huge theme to watch because it really influences where all that money is going to flow next.
Okay, on to theme number 2, the tech giants. For the last year or so, the market's basically been running on one kind of jet fuel. And this week, we find out if the tank is still full. Just look at this list. 4 of the most powerful companies on Earth are reporting earnings: Apple, Meta, Alphabet, and Microsoft. Their performance isn't just about their stock price. It's like a checkup for the entire economy's health and investor confidence. You see, the amount of money being poured into AI infrastructure and development has been just massive, almost unbelievable. It's been the main engine of market growth, and it hasn't just lifted tech stocks. That optimism has spilled over everywhere, including into crypto. So really, it all boils down to this one question for investors. Do these earnings reports prove the AI spending spree is still going strong? Or are we about to see the first cracks, the first hints of a slowdown? The answer is going to send ripples through the entire market. All right, for our third and final piece of the puzzle, let's zoom out from the boardrooms and look at the world stage. We're talking about a super high-stakes meeting that could really define global trade for years to come.
Okay, so the stage is pretty much set for this one. Just this past weekend, we got news that a trade deal between the US and China is getting close. That news alone has given markets a nice little boost, and it's all leading up to the main event on Thursday, a face-to-face meeting between President Trump and President Xi. So what have all these positive headlines, all this deal is nearing talk, actually done? Well, one thing for sure, they have cranked expectations way, way up. The market is now basically assuming there's going to be a good outcome, a handshake, a deal, something positive. And that's where the danger is, because when expectations get this high, the risk of a letdown is just as big. If that meeting ends with nothing but some polite photos, or even worse, something negative, the market that's been happily pricing in a deal could flip on a dime. And I mean fast. Okay, so let's recap. We've got central banks, we've got big tech earnings, and we've got this huge global summit. How in the world do these all connect? Well, it all boils down to one simple, but really powerful idea. And that idea is risk sentiment. You can think of it as the market's mood ring. When everyone feels optimistic and confident, we're in a risk-on environment. Money pours into things like tech stocks and crypto. But when fear and uncertainty take over, it's risk-off. And that money runs for safety. And this is why this week is just so incredibly potent. Look at how every single one of these events could pour fuel on a huge risk-on fire. The Fed easing up, that's great for risk. Strong AI spending, also great for risk. A successful US-China deal, you guessed it, great for risk. All three are pointing in the exact same bullish direction. And here's the real kicker. We're not just watching one of these stories play out. We're watching three. Each one of these things, central bank policy, tech earnings, global trade, is big enough to move the entire market all by itself. Having them all slammed together in the same week, that means we could see a truly massive, coordinated move. Right now, it feels like everybody's betting on the good news across all three fronts. But, like we said, when expectations are this high, so is the risk. So the final question is this. In a week packed with this much noise, which story is the market actually going to buy? I guess we're all about to find out.